Okay, let's get underway then. This is the Expats Portugal webinar for the 1st of August, already, 2024. It's
Yeah.
tax efficient tips and financial planning for expats in Portugal. And you're in good hands tonight with Henry Kent. And we're going to talk to Chris Gabbett as well tonight from Holborn Assets. How are you, Henry? Good to see you again.
Yeah, thank you very much, Carl. I'm very well, thank you. A lot going on here at the moment. We're currently in the process of packing up all of our stuff in Spain, Barcelona, and moving over to the Algarve. So
How exciting.
juggling working and
How
under strict
exciting.
orders from the partner of packing and making sure everything's packed correctly and in the right
Yeah.
boxes.
Well,
But
thanks
yeah,
for fitting us in. I mean, it's amazing because you are doing what you're talking about. You're doing it
no,
personally,
definitely.
going through that process. So you've got a very special insight.
Yeah, no, indeed. No, it's a pleasure to be here. Thanks
Okay,
for
and you've got
having
a
me.
presentation for us. If I may, just give everybody a bit of an introduction. As Portugal continues to grow in its popularity for expats moving and retiring abroad, we'll be covering tonight a walkthrough of the fundamentals of good wealth management and financial planning as an expat, along with tips and essential advice. Additionally, we'll discuss tax implications, investment strategies, and how to maximize your financial potential in your new home of Portugal. So join us tonight. You'll experience an introduction to Holborn Assets. You'll find out everything financial you should consider before you move, the all important before you move. You'll be looking at when you become a tax resident in Portugal, what happens then, the NHR and the changes to that, NHR 2.0, Henry will cover that as well. Investment services for US connected clients, that's where Chris comes in, and there'll be a chance to ask questions in the Q&A session. So that's what we'll be doing tonight. So we do welcome your questions and we'll deal with them after Henry's presentation, which we'll go into now.
Perfect. Thank you, Carl. So we'll jump straight in. Today, obviously myself speaking, I'm one of the senior financial planners here at Holborn Assets, sorry. I'm joined today by Chris, who's with me, the investment manager from LGT, who's going to jump in a little bit later to cover their services for US connected clients, as Carl just said. But yeah, if there's any questions or anything like that anyone has throughout the webinar, there is a Q&A box. And we're going to stop at the end and run through as many as possible. But what I would recommend, if there's unique questions or individual sort of questions related to financial planning, savings and investments, I recommend reaching out to me. I'll include my email address, contact number, but also a QR code where you could book directly into my diary to have a one-on-one meeting. So yeah, good evening, good morning, good day, everyone. Let's jump straight in. So a quick introduction to Holborn Assets. For anyone on this webinar who hasn't sort of come across us in the past or spoken with myself and my colleague Jason, who also works with Expats Portugal, we are a global wealth management or financial advisory. We specialize in providing cross-border financial advice to expats all around the world in over 100 different countries, and that's via our 21 international offices that we have. However, me and my team, we specialize in Portugal. As a company, we've got in excess of 3.2 billion US dollars assets under management, over 20,000 clients across our multiple offices, and we are completely independent. So we're not owned by any of the major banks or institutions, or fund managers, investment providers. It essentially allows us to have access to the full market to be able to tailor make and design our financial advice to each and every individual client's circumstances. We'll just jump on from there and get started into the essential advice and considerations before making the move. These are conversations or areas that are considered on the majority of my meetings of clients who reach out to me who are looking to make the move. So it's imperative to run through these sort of 4 main points. And as Carl mentioned earlier, I'm currently speaking from a position of experience as I'm going through that currently at the moment as I make the move to Portugal in the next 3 weeks. So the importance of financial planning before you make the move. Budgeting and understanding your expected outgoings and lifestyle expenses. I imagine for the majority of people who are on this webinar or listening in, they may be in countries or located in areas that have a higher cost of living to Portugal, but it's still essential to make sure that you understand what your expenses will be like in Portugal, in the location that you choose as your base, whether that be initially renting or buying, or if you've spent time there, you'll have a sort of idea. This is important because you need to understand from a financial planning perspective what your level of income is, whether that's from pensions, whether that's from your investments, properties, or employment. If you're still currently working and not retired, you need to make sure that you have sufficient income and the longevity of that income to cover all of them outgoings and expenses for your future. You don't want to put yourself in a position where you have to pack up and leave or go elsewhere. And a really good website that I've been using regularly as well, and I recommend it to everyone, is Numbeo. It keeps up-to-date data on certain locations. You could put in a place or a location, and it can tell you average rental prices, utility bills, meals out. It's a fantastic way for budgeting. So yeah, financial planning before you make the move, understand your expenses against the outgoings and cost of living. Carl, have you come across or used that website?
Yeah, I think Numbeo is great.
before?
Yeah, very good. And of course, the Expats Portugal community forum is also another good way of connecting with the respective areas of Portugal as well, because the cost of living does vary across Portugal. Good way to
Yeah.
meet the community and get a little bit of insight from there. One thing I wanted to ask you, Henry, is how far out should people start this process of contacting you to have this conversation? Is it ever too early?
Well, for a sort of initial conversation, to touch on some points to consider, but before you're starting to actively make changes, or it's necessary to make changes to the structure of your investments or plan for alternative options, I would say sort of 3 to 6 months, that it's the sort of key area before becoming a tax resident. But to have the initial conversations, to start sort of information gathering, let's say. I imagine, and I've spoken with people who start doing it years before. But no, before you're actually in a position for it to be necessary to make any sort of restructuring or reviewing your alternative options, 3 to 6 months is a sort of key time frame there.
Thank you for that.
No problem. The next one is pensions and investment planning. This is a key topic for everyone because if you're a retiree, this is your main source of income. You need to make sure that when you move to Portugal and become a tax resident of Portugal, it's a whole new tax structure, let's say. So some examples as previous tax efficient investments from a UK perspective, an individual savings account, an ISA. From a Canadian perspective, TFSAs, they may no longer hold the same tax benefits. Once in Portugal, they tax them in a completely different way from the tax benefits that you used to have. So understanding how these are taxed is imperative because this goes back to the financial planning aspect to make sure that you've got sufficient income covering your lifestyle expenses. So if you're able to, and it's suitable, review alternative structures if it's necessary to minimize taxes on your pensions and investments and improve your standard of living in retirement. And this goes back to what you just said, sort of the pre-planning aspect. If you're within the 3 to 6 months mark and you're still a tax resident in your country that you're residing before making the move, you're still in a position where you benefit from the taxes that these structures offer. But once in Portugal, if you then sort of decide, okay, I am going to do this and I do need a restructure, then Portugal at that point, if you're a tax resident and you surrender any investments or have to take withdrawals, that could be liable for tax in Portugal. So it's always important to pre-plan that tax year before making the move to Portugal in case you miss out on any of these sort of tax allowances or benefits. And I always say be proactive rather than reactive with these things. The third one, which always comes up, is what to do with your home. This is a difficult one because homes do come with sort of sentimental value, and people also like to have a base in their home country. They don't want to feel like they're completely packing up and moving, where others decide, yeah, that's great, that's exactly what I want to do, but others still want to hold on to that sort of property. But if there is sort of plans that further down the line, you may look to sell that property. If you decide that in the year, again, before making the move, it's likely, as the majority of countries offer main residence relief, where there wouldn't be any capital gains on that, where if you waited and sold the property as once in Portugal, there could be sort of capital gains liable, whether that be in the home country or Portugal, dependent on tax regime that you're under. So yeah, consider what to do with your property before making the move is a big one as well, because that could save you quite a bit in taxation. But it's a difficult one. It's a hard one because of that sort of, as I mentioned, that sentimental value. That could have been your home for a long period of time. And it's a difficult choice to say, I'm going to sell just on the basis for tax.
Yeah, I suspect sometimes the numbers do help people with their sentimentality, however, once they've had the conversation.
Yeah, of course, when you sit down and break it down, you see the figures and the zeros, you realize, it does make a lot of sense.
Yeah.
So that's a big one that always comes up. And then the fourth and final one is understanding the difference in taxation. This is a big one. So what makes you a tax resident of Portugal? The general rule of thumb is if you spend over 183 days of a calendar year within Portugal or elsewhere, that is, you are a tax resident of that country. Portugal also states that if you move your tax residency and notify the tax authorities and is under a registered address, that is then, if that's done, then you are considered a tax resident of Portugal. But for anyone that sort of owns a property in Portugal and spends less than 183 days or something like that, then they may not be considered a Portuguese tax resident, but it's a difficult one. So the general rule of thumb to go by is if you spend over 183 days of the calendar year within Portugal, you are considered a tax resident.
Okay.
So they are my 4 essential tips before making the move. These come up time and time again on all of my meetings with clients and individuals who are looking to move to Portugal or elsewhere, that is. These 4 sort of main points are always needed to be considered. So I like to hammer it home and get everyone thinking about these 4 points before. So if anyone's on here and they have questions around sort of how their investments or their pensions are going to be taxed, the property aspect, and wants to sit down and sort of speak with me to look at and run through any numbers, then as I mentioned at the end, I'm going to include a QR code that will allow you to book into my diary, and we can sit down and have a chat about it. We can run through your individual situations or situation and talk about it.
Right.
Any questions on that, Carl?
Not yet. We have got a couple of questions that have come in. Thank you for those. We've got a nice full house as well. So good evening to everyone. Thanks for joining us. Do pop any questions you've got into the chat alongside Scott and George's questions, and we'll come back to those at the end there.
Okay, great. We'll come back to them at the end. Yeah.
Yep.
Okay, great. So we'll jump on then. So the next part, what to do once you're a resident in Portugal? You're there, you're settled, you're probably living in shorts through the majority of the time there. But these 4 points are very important. The first one is, are you eligible for NHR? This is difficult because obviously I imagine the majority of people on this webinar understand the situation that's gone on. It was stopped at the end of last year, the 31st of December. However, there is a sort of grandfathering or transition period, which I do cover later. But yeah, understand whether or not you are eligible for NHR. And it's very rare that if you are eligible, then to apply for it, because it's very rare that you wouldn't sort of benefit from the taxation regime if you're able to do so. And I've got more details on this later, which I'll touch on and go into more details.
Mm-hmm.
The next one is, do you rent or do you buy? This is a big one. Which one makes more sense? As I mentioned, I'm going through this at the moment, and we've decided on renting for the first 12 months. As we've been on scouting missions, we spend a bit of time in Lisbon we decided that Lisbon didn't tick all of the boxes for us. So we're going down to the Algarve, and we also have an office there, so it's suited on that front. But it's too big of a decision to decide on where you want to buy, where you want to live, especially when taxes can amount to nearly sort of 8% on the property value before being 100% sure. So I always recommend, unless you've spent quite a lot of time in Portugal and you know for sure exactly where you want to live, where you want to buy, get your boots on the ground, rent for a period, travel quite a bit, and find which area best suits you. Because as you know, Portugal varies all throughout the country, and it's different for each and every person for what they're looking for.
And you'll have a great time doing that.
Exactly.
Yes.
Yeah, 100%. That's what we're looking for, the road trips and traveling around. So yeah, it will be it'll be great. The next one, is an accountant necessary? Will you need help with your annual tax returns? There's lots of great information, especially on the Expats Portugal forum, where people can put forward questions, and sort of Facebook groups as well. But I think it is completely necessary to have someone there to assist and help. You're in a whole new, completely tax regime. You may not speak the language just yet, or you may do, but understanding bureaucracy and this type of information is not easy. So yeah, and there's many on the Expats dream team, not on the dream team, but they're part of the Expats Portugal directory.
Both actually, Dream Team and Business Directory certainly help you out with accountancy advice.
Yeah, definitely. We myself and also Chris, we're not tax advisors ourselves. My qualifications and experience lie in financial planning and wealth management. So specific sort of personal income tax questions, this is not something that's suited for us. We provide advice on how to structure your investments in the most tax efficient way, your savings, investment opportunities that are out there at the moment, but personal income tax, that would need to go to someone like Concito or others that are in the directory.
Absolutely.
And then, how important is a financial advisor? I'm biased, I would say yes, very, very important. Some people may have financial advisors at the moment. Before making the move, put forward the question whether or not they are eligible, able and licensed to provide financial advice to you, even once you're based in Portugal, and whether or not they understand local taxation in Portugal.
Right.
I've had a client this week who moved from the US, and it's myself and Chris working with them actually. And he was initially told from his financial advisor that, yeah, we'll be able to continue to work with you. You just need to keep your investments against your US property. He made the move, and then his advisor basically told him that he can't continue to work with him. It is essentially fraud for continuing to work with a non-US resident under their licensing and regulations. And he's now in a position where he thought he had all of his finances sorted and resolved, and now he's in a position where he's having to sort of actively get out and get this sorted. So wow. Yeah, and yeah, it happens a lot, funnily enough, from a US perspective. I imagine Chris will go into this in quite a bit of detail, but yeah, from US connected clients, we see it quite a lot from advisors in the US not wanting to give up their clients, but
right.
not providing the correct advice, as certain sort of assets are taxed unfavorably in Portugal. So you need to make sure that you're investing into the right assets within their 401ks, IRAs, or anything like that.
Right. And the appointment with you is not suddenly jumping ship. It is to talk about the options, isn't it? It's a way of finding out if it's a good fit. So by speaking to you as a new financial advisor, the person is not dispensing with their existing advice. They're opening themselves up to new possibilities with you.
No, exactly. The first introduction meeting is more just sort of understanding our services, an introduction to who we are, myself, and what we do, and then understanding whether or not our services are relevant or even beneficial. And if that is the case, then what I usually do is prepare my advice in an email format, so I can then send to the client and then sit down on our next meeting and we can sit down, we can do a side-by-side comparison, answer any questions or queries. But yeah, it's all quite laid back.
Okay. Yes, getting ready for the relaxed lifestyle of Portugal. Excellent. Well done.
Exactly. Exactly. So the next one is one sort of investment structure that I just wanted to touch on because this is very popular and favourable for expats within Portugal, but also within Europe as well. Unfortunately, for any US nationals or green card holders that are on this webinar, due to FATCA and legislation and reporting costs, these are not suitable structures for any US connected clients, but for all other nationalities, this is quite a popular and tax efficient investment structure to look at. So it's called a Portuguese compliant bond or a wrapper or a life assurance bond. And essentially it's a tax efficient sort of investment platform that allows you to wrap your assets within a tax efficient box, essentially. And the longer that you hold on to that box, the less tax that you have to pay on the capital gains over a certain period of time. So for anyone planning for, let's say, the end of their NHR, when they know that their tax is going to then potentially jump up, if you look at this type of structure, that by the time you do come to your NHR, and you look at this type of structure to sort of provide you with an income, you will be putting yourself in a 60% reduction of capital gains over that period of time.
Sorry, what were the regulations that you said precluded US folks from taking advantage of this particular investment?
Well, there's many, but it's mainly down to FATCA legislation.
What's that?
So basically, from a US perspective, Chris will go into more detail on this, but they have to pay tax every year on their worldwide income and assets.
Yeah, okay. Oh,
Anything you'd like to add there, Chris?
No, I mean, look, FATCA's been around since 2012. It was brought in to effectively shift the burden of tax reporting from the individual over to the institution. So a lot of, whether it's wealth management firms, banks, whoever it is, bond providers, sort of want to steer clear of providing that sort of detail to the IRS, and that's why a lot of these sort of options are closed to US providers or US clients. The other part is it's just how these bonds react with the US tax code. So a lot of the investments that are available to, whether it's UK individuals or Portuguese individuals, wherever else in the world, that are taxed on a slightly different basis, i.e. not on a worldwide basis, then yeah, it's sort of more tax. The products are taxed more aggressively for US people. But I'll go into more detail on that side of things.
Thank you, Chris. Thanks for that.
Cheers, Chris. Yeah, so with this type of structure, you can have it from let's say any British nationals who are in this webinar. It's the sort of closest structure to an ISA that you can possibly get. I know ISAs are completely free of capital gains. This isn't, but an ISA is a wrapper. So within that ISA, you can have any sort of investment strategy, underlying assets, and you can do exactly the same. But as long as it's within this wrapper, you get very good tax benefits from it. You also can make changes. So for anyone that has an active sort of investment or approach from their financial advisor, or if they're a DIY investor and doing it themselves, they can buy and sell within this bond, and that doesn't trigger a tax liability. Tax is only payable when withdrawals are made. So given the current economic climate that we're in at the moment, and also sort of going through COVID, it was imperative to have sort of potential changes on portfolios if anyone was invested in certain sort of sectors or areas that were affected heavily. If you have that active management approach, then this is the type of structure that could potentially be suited. It also, you're able to hold US dollar, euro and sterling. So for anyone that's wanting to keep their base currency, not having to sort of convert all of their funds over to euro, they can continue to hold their original currency, as it's completely flexible to do so.
Okay.
Also, a little known tip as well. I helped a client, this was sort of 6 to 12 months ago now. He sold quite a large piece of land and sort of 3 properties in Coimbra, and downsized. And he was hit with quite a sort of large capital gains bill, but or tax, let's say. We sat down and reviewed his situation. And with this type of structure, you can reinvest. Obviously, you're eligible to reinvest into another property that can reduce capital gains, but there was still leftover funds because he was downsizing. So he reinvested into the disposable funds into this bond, and it exempted him from capital gains.
That is good to know, because yes, to quote Michael Caine, not a lot of people know that. So that is quite, most people imagine, don't they, that you'd have to reinvest any proceeds from property into property, but this is another option. This is another option, yeah. Okay, there are some sort of qualifying requirements, such as a certain level of income needs to be taken out on a yearly basis, and it can't go over a certain amount. But yeah, you get a tax exemption for a reinvestment into this type of structure. It's unfortunate because it has to be done within 6 months. And another client as well I spoke with, he was at the 7-month mark and sat down with me, and he didn't know, and we just missed the boat with him. So it was yeah, pretty unfortunate. But yeah, it's very important for anyone who's considering downsizing in Portugal. You can get exemption on capital gains if you want to look at this type of option. Yep. Yeah, but again, this financial advice is necessary for this type of sort of structure. So to speak with me, to run through your situation, understand if it's suitable for your individual circumstances is imperative. Okay. An update on the NHR. People are probably following this quite closely. This has always been brought up. The NHR 2.0, I'm not going to go into too much detail because it's sort of not sort of finalized as of yet, but obviously the art and innovation sector is, but there's talks of expansion on that, I believe. Carl, is that correct? Yes. Well, yes, the fact that we even have this phrase NHR 2.0, you're going to talk about the old one. The new one is subject to certain conditions and is a little bit of light at the end of that particular tunnel. I'm not sure, I mean, it's nothing like the original NHR. No. But I think it's been quite a good move from the new government, from the new politicians, to encourage people to come to Portugal and not completely kill it off. So there is some light, and I think it's yet to be fully explained, legislated, and available to people. But it's worth pursuing, but it's not what it used to be. No. But for anyone who when I say pursuing, I mean it's worth looking into. It's worth finding out what's going on and to see if you are eligible. Certain types of professionals will be eligible for NHR 2.0. Yeah, I heard that they were going to introduce sort of more sectors or roles that do qualify. But we have to be very careful in Portugal that when that's suggested within the parliamentary chamber as a good idea, that can then become something that looks like is actually the case when it's something that's just being considered. So we'll have to defer to the appropriate professionals on that and see what's coming in the pipeline. They're all on holiday at the moment, so nothing's likely to be decided. Not the professionals, but the politicians. Politicians. Okay, great. But yeah, for anyone that falls into the grandfathering rules, although it was sort of ceased or stopped at the end of last year on the 31st of December, for anyone that falls into any of these qualifying categories, so whether you had a purchase of a property before the end of the year, a lease agreement or a rental agreement, you reached out and started the process for obtaining your visa, then these are all qualifying criteria. That means that you can still apply for NHR. And from speaking with people, a lot of people are still going through this and maybe not aware or still trying to sort of obtain that NHR, and it is, and you are eligible. So yeah, if any questions on that, that's not something that we specifically specialize in and provide advice on. But yeah, if you fall into any of them categories, you are making the move this year, then I would recommend
obtaining it if possible and speaking with the correct people to do so.
Okay.
So I've done quite a bit of talking. I'm going to pass the microphone over to the second guest speaker, Chris Gabbert. Thank you, Chris. I'll pass it over to you.
Yeah, thanks, Henry. Thanks, Carl. Yeah, just by way of background and sort of, I've seen a couple of the questions. I've been with LGT for, well, since 2011 now. I started on the UK private client team and then moved across to our US specialist business. So I can cover off sort of the UK side of things and the US side of things as well. So yeah, conscious that there's some non-US individuals on this call, but yeah, really sort of focusing on what we do. We are in a pretty unique position where we've got a SEC regulated entity that can provide investment management advice to anyone with a US connection. So that would include anyone with a passport, a green card, someone that has previously been out to the States, picked up something like a 401k or other US retirement accounts, and then moved back to Europe, lost their green card or citizenship, but still have assets over in the States. We can provide investment management services for those individuals. And as sort of the earlier question that came up, we are in a unique position, and I'm sure that if you are currently in Europe or outside of the States, it can be quite hard just to do the basic sort of things. Even opening a bank account that you think is quite straightforward can be pretty tough if you've got a US connection. So again, sort of going back to Henry's point earlier in terms of pre-planning, really echo that point in terms of preparing for that. Simple things like, whether you have to spread any tax burdens over a couple of tax years, things like that, that you can get ahead of the game and hopefully save some tax on that side of things. So, but I work for a company called LGT. So LGT is not massively known across the States, but we are a sort of European-based bank. It's actually owned by the princely family of Liechtenstein. And if you ever fly into sort of Zurich or Vienna or any of the other sort of main European financial hubs, then you would have seen their signage, just like you see their JP Morgan signage or Citibank signage across the States. We are a privately owned business, which means that we don't have to report sort of earnings to any shareholders. The business has been owned by the same family for 100 years. So again, similar to sort of Henry's and Holborn Assets sort of mentality, we're very much whole of the market. We don't have our own products. We provide sort of the best sort of investment management or management services, sort of, whatever we can find, really. In terms of sort of the US side of the business, well, this slide, I'm afraid, is a little bit old. There's now 27 of us within the US business. We're based in London. I'm actually in North America at the moment, not seeing clients, but on my vacation. But we travel to the States fairly regularly to see clients and speak with clients and tax advisors and other sort of professional intermediaries. We are obviously part of the LGT firm, but we are the only SEC regulated entity. So we live and breathe anything to do with a US connected person. So we found that's sort of incredibly important over the years, where, anything involved in the IRS and the SEC, you can't sort of, half-hearted go into this thing. You really have to sort of live and breathe it, know all the sort of regulatory rules and sort of the tax considerations that I'll come on to in a minute. But yeah, we're as I sort of said, we're in a unique position where no matter where you sort of reside across the globe, we can assist along with Henry, that is. So that was sort of all I want to say in terms of sort of LGT as a whole. So if we can pop on to the sort of next slide and sort of talk about, effectively, what we cover off in terms of our expertise. Well, I mentioned sort of US-based accounts. Well, whether that's IRAs, Roth accounts. There was a question on Roth accounts and sort of tax differences between the sort of Portugal and the US. We can cover all of that for you. As Henry alluded to, we're not sort of tax advisors, but we are very much tax aware. And Pretty much. I don't want to say every scenario just yet, but we've come across most scenarios that you could think of between myself and Henry. So we can offer our advice there. But other sort of accounts, whether it's sort of UK connected individuals, well, it can be sort of ISAs, any sort of UK pension accounts, typically via a SIP or a SAS. Again, there was a question earlier about a SAS. They can still be managed. You don't have to sort of eradicate that wrapper when you move to Portugal. It's just about sort of understanding the connection between whether it's the UK or whether it's the US and the Portuguese tax code. Not to reiterate any further, but if you can sort of get ahead of any planning before you're sort of, a Portuguese tax resident, then, hopefully you can still utilize some of the allowances that you have in the UK or the US. We often see where clients, potentially move to Portugal and they've got an ISA in place. Well, sometimes that ISA is not going to be recognized where you move to, particularly sort of Portugal. So if you can sort of effectively crystallize any gains within that tax wrapper before moving to Portugal, it's a great planning technique that'll save some tax over time. So I won't mention pre-planning again, hopefully, but yeah, just to sort of reiterate that point.
Point has been made. Yes.
Yeah.
Be proactive rather than reactive.
That's exactly it. And look, as again, I think there's a response in the questions. We work with tax advisors sort of across Portugal, UK, US, wherever. So I'm sure Henry and Carl will be able to share that information. So look, what we're trying to do is sort of build a lasting relationship with clients, with Henry, that is. As I said, sort of we've been going as a firm for over 100 years, specifically looking after US people since 2012. And look, that's what we're here to do. We're here to sort of hopefully assist with any sort of tax planning side of things, and making sure the underlying investments are tax efficient, but also meet the client's long-term goals. Henry mentioned earlier about sort of pensions and predominantly sort of where that income is sourced from in retirement. Well, we can assist on that side of things. And again, from a US perspective, it's just making sure that, you aren't falling foul of any IRS regulations or SEC regulations, and just making sure that effectively your investments are considered tax efficient no matter where you are in the world. We work with sort of, and I hate the phrase, but I'm going to use it, globally mobile individuals. And it's just ensuring that, whether you spend, half your year in Portugal, half your year in the US, half your year in the UK, it's just making sure that, your investments and the overall plan that Henry can assist with works in all of those jurisdictions. That's what we're here to do.
That's good to know, actually, Chris. The GMIs, the globally mobile individuals. Some people might not know that's what they are. So it's worth having that conversation, isn't it? Just if they're planning to be is it the snowbird? That's the phrase that's used in the US, isn't it? If they're planning to be half here, half there, or across 3 different countries, that has a tax implication. So again, a good idea to have a chat with you.
Yeah. And really, it's quite common. It really is that you'll spend, whether you'll spend, your summers in Europe and you'll go back to the States or wherever else in winter. It really, really is common. And as soon as you throw in, clearly 2 jurisdictions, it makes it a little bit difficult. But a 3rd jurisdiction, you definitely need to sort of understand that you are in that situation where you do have to consider effectively three tax codes.
And whether it's 2 or 3, it's not without implications. So it's useful to find out. Great. Chris, thank you very much. And thanks especially for joining us while you're on vacation.
No problem at all. Henry, myself and Henry have been working with each other for a number of years now. He reached out to me a few months ago and said, look, can you join? And it's a nice break anyway. We were joking before the call that it's I'm doing this webinar and then I'm off to Niagara Falls. So
nice. Okay.
Very nice.
But don't go just yet. We do have questions for you. Let's let Henry conclude the presentation and we'll come back and we'll address all of the questions that have come in. So stay where you are, Chris. Don't go to Niagara Falls just yet.
Absolutely. Yeah.
Chris, can I just jump in to say one thing just to explain sort of how it works between ourselves and the process that it would be for anyone that's sort of wanting to look at their options or speak further, then what it would be is to sitting down with me. We can run through your situation, potentially look at sort of a financial plan, or as I mentioned earlier, areas that we can potentially assist and be of benefit. Then if I feel that sort of Chris's services are suited and relevant to your situation, then we all work in a sort of three-way partnership between ourselves, the investment management with yourself, Chris, and the financial planning from my side.
Yeah, exactly. We don't get too involved with sort of the overall planning. That's sort of Henry's side. We just come in for the investment solution, no matter where it is, sort of whether it's a UK based product or a US based product. Yeah.
Yeah, perfect. The next one, challenges for US connected clients.
Yeah, so look, hopefully I'm not going to bore you too much with tax, but yeah, look, ultimately, things that work really well in the US don't necessarily work where you reside, whether it's Portugal or anywhere else in the globe, and vice versa. Things that work very well in the UK don't necessarily work well in Portugal or the US. We've mentioned ISAs already, so very, very tax efficient in the UK, but doesn't sort of or no other country will mimic that tax efficient savings, and sort of that goes hand in hand with sort of underlying investments for a US connected individual. So the investment solution a lot of the times over in the States will be mutual funds, which is perfect for a US tax resident, very tax efficient and a good way of diversifying your portfolio. A lot of times those US mutual funds will be taxed quite aggressively over in Portugal probably and the UK. So that the gains might be taxed to income rates, which obviously a little bit higher than typical capital gains rates, things like that. So it's just things like that you need to be careful of. Now, as I said, it's not about sort of making wholesale changes. It's just making sure that that your underlying investments work where you're going to reside. So a lot of the times things like IRAs, Roth accounts, 401ks can be kept, and it can be kept in a very, very well, continue their tax efficient benefits. But it's just making sure that one, you're getting the right tax reporting. Two, that that your bank will not write you a letter in any time soon and say, right, okay, you've got to find a new platform for your assets. And three, you've got to know that the individuals you're working with understand sort of the tax, the sort of tax consequence of living in Portugal. I've mentioned sort of other sort of investment funds, so US listed ETFs, for example, UK OICs. They can be quite disadvantaged in terms of tax savings where you reside over in States or Portugal or wherever. So yeah, look, don't want to touch about it too much, but it's just sort of making sure that the underlying investment solution will work for you. The way that we do that is investing into sort of directly listed equities, directly listed fixed income, effectively investments that work and are very portable across the globe. We know that if you're investing into Apple, for example, that's going to be taxed, efficiently in Portugal, the States, the UK, etc. And again, we can provide all of that sort of relevant US tax reporting that a US taxpayer has to provide on an annual basis. Yeah, so thanks, Henry.
Just to reiterate that as well, Chris, sorry to jump in, just to reiterate that as well. So I've had this in the past where individuals have come to me or reached out to me and spoken with me, and their advisors from the US have confirmed that they will continue to work with them. They will happy to keep assisting them. But if you actually put forward the question, do they understand local tax rules and laws? It's not usually the case, and they could potentially put themselves in a situation where one of them underlying assets are taxed unfavorably and they've not helped themselves.
That's exactly the case. Now, we're talking about large institutions here, the likes of Merrill Lynch, Citi, Wells Fargo, US bank. I've just had a client that sort of had US bank write them a letter. And, you know, in all fairness, it probably comes down to EU regulations and the fact that, you know, a large US bank won't really want to consider the cost of complying with EU regulations. And look, fair enough. It's, you know, we're talking about sort of 0.1% of their client base, really. But that's where we can come in and sort of provide some clarity on some of the local rules, I guess, and also ensure that, yeah, you won't get a sort of alarming message from your current provider and sort of saying, right, okay, we're going to have to sort of sell down to cash or anything like that. So yeah,
because that would trigger immediate tax consequence, wouldn't it?
Literally, that, you know, often a client will come to us and you look, you've seen those letters, Henry, and it will come from, you know, their current investment manager and say, right, okay, you've got 60 days to find another alternative solution. If you don't, then we'll send you a check with, you know, and that'll be it. And then you really are in a bit of a pickle in terms of sort of future planning. So yeah, it's just ensuring that again, sort of, you know, a lot of wealth managers and banks will say, no, just keep the assets in if you know, if you've got a US property or if you've got family with a US property, keep it in that. But, you know, actually what we've seen is that doesn't quite happen all of the time. So yeah, it can become an issue. Sort of one thing I wanted to touch on before sort of any questions was a bit of case study. Now, sort of myself and Henry have worked with a number of clients that have moved from the US over to Portugal. And this particular couple that we spoke to probably about a year and a half ago, while they were doing sort of pre-planning exercise, they had a number of accounts over in the States. And they really just wanted to understand, right, okay, how things work. So they had general investment accounts over in the States. They had SEP IRAs, which is basically a self-employed personal pension, an IRA and a Roth account. Well, at that point we said, right, okay, you know, these assets can remain in the States if you want. You don't have to move them from the States. You know, we've got a US platform that we can custody assets on. Or you can move your general investment account into more of a Euro formulated portfolio. So, you know, they wanted to take an income in euros. So we said, right, okay, actually, let's move a sort of Euro-based a general investment account over to Europe and provide that income in Europe. Have some more European-based investments that are more suitable to someone that's residing and sort of having taken an income in euros, and all the while they kept their US investment accounts over in the States, so their IRAs, their Roth accounts, and their SEP IRAs as well. And effectively, overall, what you had, these clients ended up with a really nice solution where it's about 50% of their assets that we managed was sort of euro based, and then the remaining 50% remained in the States in tax efficient vehicles, but in dollars. So, you know, it worked from basically, you know, both a sort of income planning perspective that Henry assisted on and sort of investment side of things, where it was really nicely diversified with all of these things that, you know, Henry, so Holborn Assets and ourselves at LGT will have a portal where clients can log in, view their investments across different sort of jurisdictions, and sort of, you know, obviously, you know, download any reporting, tax reporting, valuations, view their portfolios, view performance, etc. So it works. It worked out very, very nicely for this particular couple that moved across to Portugal.
Yeah, definitely. I'm just referring to that case study. They also had a lot of concerns about the US markets with the US election coming up, what that ripple effect will be from who is president. And the majority, well, their portfolios were S&P, NASDAQ, they were all US focused. So they wanted that diversification to their portfolio and reduce their exposure to the US. So yeah, we done all of that for them. So that was a really good one.
Yeah, and a lot of these cases, we, you know, it's not about making wholesale changes, you know, so we try and transfer any assets over from any, you know, existing advisor, just making sure that we can fully understand the tax that's currently outstanding on that portfolio, whether we have to sell down assets over a period of time to ease the burden, just effectively to simplify things and make things as easy as possible, in a period where, you know, you don't really want to be worrying about sort of your investment management services or needs when you're sort of packing up your life and moving across the Atlantic.
Yeah, well said. And a very interesting, that shift in exposure, as you put it there, Henry, as well. Moving away from the volatility, perhaps, of what's going on in the US. That's fascinating. Thank you.
Yeah.
That's for another webinar talking about the
Yeah, exactly.
Yes, indeed. Okay. Full stop on that right there. Okay.
So that concludes the webinar.
Okay, thanks very much, Henry. There's the famous QR code where you can book your for those of you like accessing appointment books that way. You can make an appointment with Henry that way, and the old school details are there. The old school email contact henry.kent@holbornassets.com, and phone numbers there as well. Thanks very much, Henry. Good luck to you in your process of moving from Spain to Portugal. Thanks, Chris, for being with us tonight. Is it okay with you, both of you gentlemen? We'll leave those contact details on the screen there and go to those questions. First in tonight was Scott Craig. Are you going to be focused on Canadian tax considerations or solely the US? We're a bit late to that question, but we can still answer it, can't we, in terms of how you might be able to offer a support to somebody with Canadian tax considerations. That's probably for you, Chris, right?
Yeah. So weirdly, my girlfriend's in my partner's Canadian, hence why I'm here. Look, you know, when you're moving to Portugal or anywhere else in the globe, you know, we can typically assist on that side of things, whether in the investment management side of things, and the same goes for Henry. In terms of speaking about sort of Canadian tax, it's not really sort of my area of expertise. I know the basics, but yeah, we would be able to send over some reputable tax advisors that would be able to assist.
Yeah, and just sorry, Carl.
Go ahead, Henry.
I was just going to say on that, it's understanding what your tax liabilities is going to be once you're in Portugal, and that's where we specialise. From a Canadian perspective, that's something that's probably well managed already before they've made the move, but it's exploring the alternatives so you can put side by side to understand whether or not it's worth and needed to restructure or make any changes.
There you go, Scott. And within the whole realm of Expats Portugal, I'm pretty confident we can help you, Scott, with your move to Portugal, including that aspect of it. So there you go, Scott. On to George. If one is a resident of Portugal and has property abroad which is sold, do you have to pay capital gains tax in Portugal? If one does, then is it best not to register as a Portuguese resident until one has sold one's property? Is that one of those cases, Henry, where you would recommend going deep diving into the specific circumstances of the individual to make a decent call on that?
Yeah, definitely. There's certain exemptions that can be in place, and these change from an individual to individual's situation. So I recommend sort of scanning the QR code, dropping me an email, or reaching out to me, and we can sit down and run through that.
Okay, and don't forget to mention Expats Portugal for preferential
Exactly.
treatment as well.
Exactly.
And Andrew Frank, thanks, George, for that question. Thanks for your answer, Henry. Andrew, when selling ISAs, for example, are the profits taxable in Portugal in any event, or only if moved to Portugal? What's your view on that?
So if you're a tax resident of Portugal and you sell or withdraw from an ISA, then that's a taxable event in Portugal, and there will be tax
Okay.
due.
There you go, Andrew. Amit, good evening to you. Good to see you here. Is there a table that shows the tax difference between the US and Portugal by asset class or income source, the IRAs, Social Security, Roth accounts, etc.?
Yeah, so certainly something that we can put together. I haven't got a table to hand, but yeah, it's something that we very much know and can put together for you. Okay,
reach out, Amit, for that. Yeah. If a full resident in Portugal, will I be able to keep my company? You mentioned this, Chris, before. We're probably staying with you for the answer to this. SAS pension fund in the UK and manage and draw my pension in Portugal.
Yep. You absolutely can.
Okay.
So that's actually more on Henry's side of things, but yeah, speaking for Henry, yes.
Yeah.
Sorry, yes, I heard you mention that, and then we went to the UK there, didn't we?
Yeah.
Okay, that's for Derek there. So there's your answer, Derek. Thanks, Jerry, for this comment during the webinar there. Jerry, as mentioned, we have great tax partners to advise on Portugal taxes, and we also work with an American company that specializes in tax advice for US citizens living abroad. So we've got it covered, basically. Check out all of our partners in the Expats Portugal business directory at expatsportugal.com. Or if you want some signposting, hand-holding towards those professionals, drop a line to admin@expatsportugal.com. Thanks, Amit, for your breakdown of FATCA. Is it FATCA or FATCA? Either way, it's laws to prevent money laundering. Thanks for that, Amit. Ian, are you able to provide financial advice to Portuguese residents that are UK citizens? Can it work that way around, Henry?
Portuguese residents that are UK citizens. Yeah, of course. Yeah.
Yeah. Okay. There you go.
Yeah.
Straightforward answers for you there, Ian. Jay, for US tax residents, how do we choose between engaging Holborn and LGT? What is the difference between their services and products? So Jay asking that question, Henry, I mean, basically you work as one, don't you?
We work as one, yeah, but the initial sort of contact is with myself, and then we'll sit down, we'll run through your situation, and we'll understand whether or not the suitability is correct for Chris and his services. If so, then Chris and we can be brought in and a full sort of recommendation or advice can be passed over, and then we can all get together and sort of run through that. So we work as a team between us.
There you go, Jay. Amit, I'm not sure what if this is a question or you are maybe helping me out again during the webinar. Beneficiaries of global arbitrage, US salaries with Portuguese cost of living. Does that sound like a question to you, Henry? Is there any further comment?
I'm not sure.
Amit, help us out. Help us out with that. Anonymous attendee, does Portugal base taxes on your net worth in the US or just the retirement income you're bringing into the country? Also, how much money do you need to bring into the country? Can you leave a 401k in the US? A few questions wrapped up in one there.
Yeah, you can there's a few questions there. You can leave your 401k in the US, just like the case study that we've just spoken about. You keep it with a US custodian. It doesn't leave the structure that it's within. But from Chris's side, he actively manages that portfolio and the underlying assets with a European perspective and understanding.
Okay. How much money do you need to bring into the country? That's quite an open-ended and the start of a conversation rather than an end of one, I think, isn't it?
Numbio. Check
Right.
Numbio and see.
Yeah, okay. And obviously make the appointment with Henry if you want to talk specifically about your circumstances and what you're going to need to cover your projected standard of living there. Anonymous attendee. The first part was, does Portugal base taxes on your net worth in the US or just the retirement income you're bringing into the country? Can you comment on that bit, Henry?
From just funds that are brought in, when it's considered sort of income, it's taxable.
Yeah. Okay. So there you go, anonymous attendee. If any of you need further clarification or want to expand your questions, do so now in the Q&A. Alex, good evening to you. We secured NHR but haven't moved to Portugal yet. Is it still preferable to sell the house in the US prior to moving, or with NHR it doesn't matter? That's another one of those that we might recommend an appointment for, right? For the specific.
Definitely. Yeah, because there's certain sort of considerations that need to be taken there before sort of giving a straightforward yes.
I'm getting the hang of this. Ian, UK financial advisors. Now that you UK are out of the EU, cannot advise in Portugal, are you able to advise in both the UK and Portugal? That's an interesting consideration because Holborn presumably do work across both dominions, do they not?
Yeah, exactly. Yeah.
There you go.
Reach out to us. Let's have a chat, and we'll go through that, and I can answer how that would work. Yeah.
Do Holborn recommended investments for Golden Visa? Do you avoid the LGT US concern? So Golden Visa, of course, something that Holborn offers. I'm not sure I understand the question, but maybe you do. Do Holborn recommended investments for Golden Visa, the 500k euro options, avoid the LGT US concerns? Can you answer that?
I'm not exactly sure the question, but my colleague Jason Swan, he specialises and deals with the residency via citizenship and the golden visas for Portugal. He's actually doing a webinar next week in partnership with Expats Portugal, where he'll run through all of the golden visa requirements, planning, and also investment options. So I recommend tuning into that webinar next week with my colleague Jason on the golden visa in partnership with Expats Portugal. All
right. And with the LGT aspect of that, Jay, perhaps reach out to Henry as well. Scott, it sounds like most of the focus for LGT is US accounts. Does Holborn offer similar service for Canadian expats living in Portugal? I think we've covered that already, didn't we?
Yeah.
Chris, you
just,
are... Go on. Sorry.
Just on that, Carl, quickly before we sort of run out of time.
Yeah.
Chris, LGT do offer a wide suite of services for all nationalities. Chris just specialises with the US connected client strategy, so that's why he's been very focused on that this afternoon.
Okay, thanks for that prompt, Henry. Are we going to be cut off at 8:30? Or can we go on?
I've got the red button, so it depends if I press it.
Your finger is hovering on the red button. We've got the dream team session in half an hour.
Exactly.
Well, I'll go through these as quickly as I can then. Chris, you are likely within 45 minutes drive of me at the moment, back in Canada, getting stuff organised for life in Portugal. So maybe a meet up there with Scott and Chris. Are you fee-only fiduciary advisors, asks Charles.
Yeah, so the way our fee structure works is initial meeting is completely free of charge. This is to understand whether or not our services are suited or relevant. And then our fee structures is against a percentage of the assets under management that we advise on. So that's usually a small upfront fee for the initial advice, the onboarding, the compliance, and then an ongoing fee for the continued life of the partnership or the relationship. But that all depends on the complexity of the advice, the level of investments that's being advised on and managed. So it's not as easy as just saying a one-off fee. It varies.
There you go, Charles. Thank you, Henry. Should a US IRA be converted to a Roth before tax residency in Portugal? From John Newman.
It can certainly be something that's, in terms of tax planning, we've seen is quite a common piece of tax planning that we've seen over the last few years. Effectively pay your income tax up front, moving it to a Roth account. It all depends on the situation. So I would suggest that's one that sort of happy to sort of arrange a call with Henry on that one.
Yeah.
Well done, chaps. We're working our way through these. And thanks for all your questions, by the way. Thank you to everyone who's been here this evening. Couple more then before we go. And Dream Team at 9, not long to go until we welcome members from the Expats Portugal Business Directory. Those professionals, they'll be on at your disposal and taking questions at 9. So I think staying with you, Chris. So if your investment manager closes your account, does LGT take over the existing investments to avoid cashing out?
Yeah, that effectively that's what we try and do for a number of reasons, but the main reasons are we don't want to sort of crystallize any tax, sort of short period of time, so there's no planning involved, and secondly, you don't really want to be losing out on any sort of market movements, obviously in a positive manner.
Yes.
So yeah, we effectively try and transfer any existing assets over to our platform. Everything remains in the client's name, but yeah, it just sort of exits their previous provider's platform, goes onto ours.
Thanks, Chris. Anonymous attendee, if withdrawing funds from a SIP in the UK into a bank in the UK, are they taxed in Portugal or only the amount transferred into Portugal?
It would be considered pension income, so it would be taxable.
Taxable in Portugal there. Alex, should we file...
If a tax resident in Portugal, that is. Sorry, if you're a tax resident in Portugal, yeah.
Okay. All right, there you go, Anonymous. Should we file Portugal taxes first if we have NHR, or the opposite? I keep hearing that one must file in Portugal first, but I don't understand why. I think that might be one for the Dream Team session. Yeah. Alex, join us for that. What about other countries? For example, South Africa. Can you help South Africans, Holborn Assets?
Yeah.
Okay, yeah. Big nod there from Henry. And yeah, that's what about other countries from Denise there. And Alex, yeah, I think I'm going to refer you to the Dream Team, Alex. Join us at 9 for that. And that just about covers all the questions in the Q&A box there. So thank you for those. Thank you, Henry. Thank you, Chris, for answering them and your earlier presentation. So yes, over to you by way of a conclusion tonight.
Thank you very much for having us, Carl. It's been an absolute pleasure to speak with everyone. Yeah, I'm here. If you have any questions, you have any sort of queries or would like to speak further, as we've mentioned, the QR code's there. You can scan it or drop me an email, or on my Spanish number on 697206381. I'm available on WhatsApp as well. So reach out to me whether you want a free sort of complimentary meeting, free Portugal tax guide that we offer, and our corporate brochure. But once again, thank you all very much for attending, and it's been a pleasure.
Great, and that will be a Portuguese number soon. So good luck.
Yeah, it will.
With that move to Portugal. Boa sorte, as we say in Portugal, with everything you're doing, Henry. And thanks again, Chris, for joining us while away on vacation. And enjoy that trip to Niagara Falls. So thanks, everybody. I think the red button is yours, Henry.
Yeah, thank you very much.
Join us on the Dream Team session at 9 o'clock Portugal time.
Cheers all. No.
Thank you.